been maybe a bit off, but I think the revenue number looked rock solid, and therefore this 79-80% uptick was very, very strong. It got accompanied by near 65%, if I'm not wrong, profit uptick as well. And Mr. Sivaramakrishnan Ganapathi, Vice Chairman and Managing Director of the company, Johnson, right now to talk about the numbers and the outlook. Mr. Ganapathi, good having you. Thanks for joining in. It's been a while. Neeraj here, good afternoon. But you must be happy with the performance. Were there things that you would have probably you can complain about?
No, of course not. So, we have had a lot of work which have culminated in this performance. I think a lot of operating improvements have happened across the range of factories and across the business. I think we are seeing a fairly good amount of demand traction. The geopolitics notwithstanding, it's only helping us rather. So we are seeing a good amount of tailwind in our business, and with growth, we will also see some operating leverage kick in. So we are working towards margin improvement while we sustain our growth as well. So we are in a good position from that perspective.
The belief, Mr. Ganapathi, or at least the market wanted or painted one side of the picture, which was that while these tariff wars, etc., and restrictions might be coming, it might be too late for Indian textile exporters to take advantage because the season stocking would have been done. Now, I would love to understand what went behind in this quarter for the strength, particularly on the export side, and how does the year look like? Because I did hear a fair degree of optimism in your opening answer.
See, I think, what had happened was last year we saw, brands were having excess inventory and most of those inventories were pared down. So there was a natural bounce back after that correction. On top of it, the costs are increasing in China. There is geopolitical issues which are constraining more buying from China, and Vietnam also is becoming expensive. Bangladesh has got its own political problems. All of this are resulting in brands trying to reallocate business to other regions. So beneficiaries are countries like India, Indonesia, and so on and so forth. And we are seeing a fair amount of traction given that we have a very good track record of execution. The product varieties that we handle also are fairly diversified, and we compete well with China and Vietnam-based players. So that also helps them, helps international retailers to look at us when they are diversifying from that region. So that is helping us from a growth standpoint. And I would say that, if I look at the next 2 to 3 years, I think this is going to continue, given that India has a cost advantage over those regions. Secondly, tariff-wise also, as long as relatively speaking, we don't get tariffed more than some of our competing regions, I think we are in a good shape. So, and I anticipate that India will not have a higher tariff than China or Vietnam. So from that perspective, also we are in a reasonable reasonable position. And then on top of it, we have about a quarter of our revenues coming from Africa, which goes duty free. So if there is a tariff across the world, and Africa continues to be duty free, then that increases the competitive advantage of Africa even more. So overall, I think we are positioned well from the uncertainties of tariff. Our relationship with customers are good. Most of our customers are doing well in their markets. So I think it's in a we seem to be in a good position from that perspective. Order book is full for fall winter, which is production for Q1 and Q2. And when I look at spring summer also, we seem to be seeing fairly good traction, good amount of prognosis from our customers.
Mr. Ganapathi, this is Harsh also joining in. You spoke about how margins, or there is room for margins to expand from here. How quickly and by how much?
See, margin improvement cannot happen overnight because it requires a lot of work from an operational improvement standpoint. So there's a lot of work which is going on. And I think as the contribution from low-cost factories keep increasing, because that's where we are expanding. Secondly, our efficiencies in those factories are also improving as we speak. I would say sometime in the next financial year, you will definitely see a stronger margin improvement over this current financial year. So FY26 versus FY25. You will start seeing that all these play out.
So would that So apologies for interrupting. Would that be H1 FY26 or H2?
So H1 you will find some, H2 will find a little more because progressively we'll be able to take it up.
And so what are the risks like of some of these tailwinds receding and receding quickly? Do you see absolutely any risk there?
No, so the market is very big. The whole global apparel market is over 500 billion. We are a very small player, in that market. So I don't see, the tailwinds receding. I don't see in the horizon any new country emerging which will compete with us. In fact, we are in a favorable position from that standpoint. So I'm not seeing any tailwind. The only tailwind could be, how Indian inflation, if it goes up and cost of labor goes up. But, we also have a depreciating rupee, which augurs well for exporters. So from that standpoint also, we are somewhat covered from an inflation standpoint.
I'm presuming at least in the last 12 quarters, this is probably the one with the highest revenues, highest operating profit, and presumably the highest, not the highest net profit, but at least the highest operating profit. You reckon over the next 4 quarters, these numbers can look significantly better?
No, they will progressively go better because
yeah, of course.
Yeah. So that is how it will happen. And quarter on quarter, we will see that as the capacity utilization keeps growing, because we are adding more capacity as well, it will keep improving. Yes.
Mr. Ganapathi, sorry, just curious to ask, maybe because I've missed this. Had you given any formal guidance for FY25, and are you on track to meet that? Part 1. And part 2, would you give a formal guidance for FY26 based on your assessment of how business is looking currently, maybe at the end of the year?
So we don't give guidance, but internally we had said that we will grow at about 15% in FY25. And when I look at standalone Gokaldas, without the acquired entities, we are growing at 19%. So we are tracking well above where we wanted us to be. And if I look at the next year also, I think we will keep the momentum up.
Okay. Fair call. We'll leave it at that. Thanks so much, Mr. Ganapathi. All the best for the quarters ahead.
Thank you so much.
All right. So now, Siddharth Kemba, you got a chance to hear that conversation as well. Sounded fairly confident, and it's something that I've heard Dipali Goenka of Welspun also say about business momentum going ahead. Are you constructive textiles, or are there better pockets to invest in?
So, Neeraj, one of the themes that we are looking for in 2025 is the exports revival or exports recovery as a theme. And in that, textiles do fit in. And what we are seeing or witnessing is that increased or improved growth demand for Indian textile players. The global tariff war is positive for India because India is at a higher tariffs compared to some of the other emerging nations like Bangladesh, where they itself are undergoing a lot of turmoil in the domestic front. So Bangladesh +1 story plus rupee at all-time low, that is also supportive. And the key factor that supports is that demand drivers are in place now, which was something which was missing a few years back. And demand from both US, Europe. Europe is a big key market for India's apparel exports, India's textile exports. And I think that is where recovery in demand is supporting textile players in India.
Okay. Himen, any thoughts here? Any of these names?
I was looking at Gokaldas while you're connecting with the management. Once again, maybe sounds a bit repetitive, but phenomenal move. We walked into correction. I believe this, at least half of this financial year is going to be a washout. Nothing much expected. Maybe it doesn't go down much if the fundamentals are solid, but nothing exciting. If you're looking at Welspun, similar story, getting top heavy. Not yet. It's probably better than Gokaldas, but yeah, it's getting top heavy. It's just on the cusp of a correction. So they don't look great, at least at this point in time.